Well, the weakening U.S. dollar is, of course, one factor, and the dollar is the lowest. The DXY is the lowest since March 2020. So definitely, you see when the dollar is weakening, you see gold strengthening as an alternative. But I was here, I think, at the show 3 weeks ago or so, and I think we mentioned that if things continue like this, if COVID-19, if the situation is not getting solved, we're going to see price of gold going up. So look at the situation. We all understand now that the virus is not going anywhere. The economies are not going to open up, and the recession is everywhere. So investors are nervous. They're afraid. There's a fear factor, and they're rushing to gold. Now, that's one factor. The other factor is, of course, how governments deal with it. So you're looking at what's happening in the US, they can get a hold of the pandemic. You're looking at Latin America. And then you look at the stimulus. They try to stimulate markets. But the question investors have on their mind is, how can you stimulate the market that's when no one can go out, and then you have third wave here in Hong Kong and second wave in Victoria in Australia and other countries. So the overall picture is quite grim. And then you have a very, very fast deteriorating relationship between the US and its allies and China. So if you're looking at all these factors, there's no wonder gold is going up. We didn't expect to go that quickly, but it's definitely heading to the $2,000 mark.
Yeah, how high can prices go? Is $2,000 the ceiling, do you think?
Oh, definitely not. I mean, I think the 2000 will see it before the end of the year, and maybe even higher. Again, as I mentioned 3 weeks ago, it's hard to predict because definitely nothing is predictable at this point in our lives, and so is the price of gold. But again, under current velocity and with current conditions of loosening monetary and fiscal policies, and again, global recession, unemployment, high unemployment, and government cannot control this, I think we'll see it heading into over the 2000 mark. I mean, if you look at the price year to date, gold is up almost 30%. Nothing can stop it to go further 30% in the next 6 months.
How can investors get in on this gold rally?
Well, of course, as a physical bullion dealer, we say buy physical gold. But we can see, first of all, we can see the ETF. The ETFs gain a lot of momentum the first 6 months of the year. Took about $40 billion flowing to the ETFs in the first half of the year. And we see the move now in the physical market. So, of course, if clients are looking some very quick and easy way to go into the market, wait for the price to go up further, and then liquidate the ETFs and the derivatives are a good tool. But we're concerned with the long-term impact of the fiscal and monetary policies. And then we think actually physical gold would be better holdings because we're afraid of bankruptcies. And think about it, the economy now in the US, in Europe, and other countries is very fragile. You need one big company to go bankrupt, and it will ignite a chain reaction, which you cannot predict where it ends.